Hey everyone, it's Mike from Orderflows and welcome back to my channel. Yesterday I posted a video about thin prints in the bar, right? Areas in the order flow where there's not necessarily a lot of volume in the two-way auction, right? And oftentimes it's the result of an imbalance in the market. And, as traders, we tend to mainly look for imbalances as opposed to areas where there's a lack of volume trading. And I want to sort of follow up that video with today's activity here in the S&Ps. It's Monday the 14th, and we opened up, then we opened up a little bit lower when the cash session opened, traded back up to around the futures opening price, hanging around Friday's close. And then we just took off from basically the 87, 88, 89 area all the way up to new highs at 01, and eventually we went up higher from there. And anytime when I'm looking at the order flow, anytime I see sort of any signs of momentum, and obviously imbalances is a sign of momentum, but there's going to be times where you don't have stacked buying imbalances or stacked selling imbalances to give you a signal. And there's going to be times where, like here today, this is the opening price, 45.85. It was down a couple of points from Friday's close. So, more or less unchanged. But we're just, when we start hanging around, the opening price, it gives you a sign of, a market that's lacking direction. And then it found its direction and we went up to new highs at the time. And again, if you're looking at stacked imbalances, right? You have a stacked buying imbalance right here. You have a stacked selling imbalance right here, but the market is just going sideways, right? If you were just to blindly buy this stacked buying imbalance, the next bar just went inside and then eventually went lower. Here you got a stacked selling imbalance, and if you just immediately got short because there's a stacked selling imbalance, well, this didn't work out because the next bar didn't even go any lower. It actually went higher than the stacked imbalance, right? So people say, oh, you're talking so much great stuff about stacked imbalances, but here's two cases where they fail. And when a market is going sideways, lacking direction, right, no matter what you're trading, whether it's order flow, price action, technical indicators, if you're in the middle, if you're range trading, nothing's going to give you a great signal. Really what you want to be looking for is a signal that we are indeed breaking out. All right, so again, yesterday I was talking about thin prints, okay, and I want to follow up on that because thin prints is the area in the bar where there's no volume either on the offer side or the bid side in the two-way auction that actually traded. I mean, it's going to be bid and offered there, right? It's going to be here at 88.5 bid, offered at 88 3/4, but nothing traded at 88.5. Even here when it was 88 3/4 bid at 89, nothing traded there, right? So you got 0-0. Okay, and these are significant levels because it's telling you that the market is moving pretty quick. Okay, so on the Orderflows Trader, we do have a setting on there which makes it easy for you to identify these areas. And it's just you go into the settings and you scroll down, find the thin print here. Most of it's alphabetized. So that puts us here, thin prints. Okay, I'm going to draw it out until tested. And I'll click apply and just give it a second. And I'm going to scroll back to the cash open, just sort of take you back to the cash opening time. It's interesting because I got, there was a comment yesterday on one of the videos and so it's, well, you got to show this stuff in real time. Okay. Well, these videos are meant to teach you what to look for. So when you're trading the market, you have an idea of what to look for. I mean, I could sit here and make a video just all day long recording, but I'm not going to do that because it'd be very boring for a lot of times where there's nothing happening in the market. So really these videos are instructional to teach you what to look for. So when you are sitting at home in front of your screen, following the order flow or even trading the order flow, you'll know what to look for. Okay. So where's the cash open here? 8:30. Okay. So, 8:30 opened up. And again, we're more or less going sideways for the first 10 minutes. You start to pop up a little bit, come back down into our sideways activity. And then we start working our way higher. Now, these are thin prints from the overnight session. And I'm not going to put too much weight in the thin prints from, the overnight session at, even going back earlier to 6 in the morning, where there's not a lot of volume going through, right? 6 in the morning Chicago time is around lunchtime in the UK and Europe. So that's why you'll notice, if you've watched the order flow long enough, you know that, around that 6 a.m. time, the volume is much lighter. Good time in terms of, in case you're wondering, what's a good time to be trading overnight is, that's sort of the time that Europe opens, from 2 a.m. to about 4 a.m., right? You get good volume. You can see in here, 1600, 1800, 4700. So it's decent sized volume, right? You don't want to be trying to analyze thin prints or lack of volume on bars that have very little volume, right? Just because it sort of defeats its purpose, because by nature on a less liquid time, right, you're going to get thin prints. But if you're trading healthy volume, like look at that, we had this nice move up after Europe opened, right? You're seeing thin print, thin print, thin print, thin print. Now, granted, this one, it's on very light volume, 187 contracts in this bar, 201, 150, then 500, but 1600 is decent, right? 4700 is decent, and we pop up, right? But really, this one is the one that you could have, if you're awake at, if you're in the U.S. and you're awake at that time, this was a nice bar to trade, right? We had nice heavy volume coming in, and the bar's elongated, so there's a little bit of volatility. Traders are looking for liquidity in the market, and they're just leaving these sort of pockets of illiquidity. Okay, and you could have caught a nice move up. But anyway, let's go back to the cash open. Okay, sort of digress there. I apologize. More or less just going sideways. This is cash open here. You got the thin print here. Next bar goes inside. You got a thin print here. Market's just going down. But again, we're sort of trading in this range. We're not seeing these thin prints as we're attempting to trade higher outside of this area that we're range bound, or trade lower, right? It's literally right smack in the middle of the range that we're trading, right? Then eventually we start going higher. Okay, after 9 o'clock, we do have a thin print coming in here. We sort of already starting to break out to the upside. Okay, that's encouraging. But again, I know that we're coming up to the opening price at 85, and I've said this many times in the past is, on a market that lacks direction for the day, you often will hang around the opening price. And this was 85 was the opening price. That's the price we opened up on Sunday, yesterday at 5 p.m. Chicago time. So the market had the whole entire time to digest everything that happened Friday, and the entire week, and closed like at 87. I forgot, 87 and 3/4 or something like that. So it was a little bit lower, but nevertheless, we get back up there, and we just sort of rotate around it. Okay, for it's at 9:13 up until it looks like we're potentially starting to break out here. Right, we got that stack buying imbalance. But then the next bar doesn't even build off it. It doesn't go any higher. In fact, it just goes inside and is starting to trade down, right? And then trading back into our opening price. Got the stack selling a balance, and it looks like, okay, maybe we're going to break lower. We're going to finally move away, because we had been trading sideways for about, this is 9:13, over here is 9:30. So, what was that, 17 minutes, right? Then it doesn't even break down. It doesn't even trade any lower than the bar with the stack selling imbalance. There's no reason to be looking to get short off the selling imbalance. And we're just back up at 85, back and forth again. Then we start working our way up here. And as we're working our way up, we get this thin print here at 6 3/4, two more here at 88.5 and 88 3/4. Our high for this sort of this range that we're trading, is 89 1/4. We actually trade all the way up to 90 1/4. So what you really want to be watching for is, are we going to hold this area up in here, above this high at 89 1/4? The trigger is these 1, 2, 3, 0 prints in the bar, the thin prints. Okay, now you'll notice you have a lot of buying imbalances in here, but no stacked buying imbalance, right? You got 2 here, then regular order flow, another 1 here, more regular order flow, 2 imbalances, regular order flow, an imbalance, regular order flow, another imbalance. So it's spread out in the bar. Again, if you're just looking for stacked imbalances, you may not notice that, right? You may overlook this, but if you're looking at a bar and it's got a lot of buying imbalances, even if it's spread out, that's still important. But more importantly, if you're looking for the thin prints in the bar, the 0, the 0, 0 here, you know that, hey, you know what? I've got some momentum. Obviously, you're keying it in together with the imbalances, and next bar starts trading higher, right? That's your go signal. That's your time to get into the market, right? To get long here, and we start trading higher, work our way up, grinding a little sideways here. Once we work our way up, not new highs, but new highs from the cash open. Our high of the day was up here at 1 1/4, and we're just sort of slowly grinding our way up. And as you're moving up, more importantly, there's no reason to be getting out of this trade or look to get short, because is there any really aggressive selling? We had this one bar here with a negative delta of -231. Everything else is all positive deltas. Here you got some negative deltas, but -69, -46. That's nothing. That's pretty small. Right? It's not -690 followed by -460. It's -69, it's -46. So it's relatively tight, telling you that, you know what, even though sellers were in control of that bar, delta ending at -69, it's still not that strong, right? The -46 also not that strong. And got to remember, at one point, these deltas, looking at the min delta, was -175, -115. And it only closed at -69 from 175, so it gave back a lot. Even here was -115, it only finished at -46. Then you get a small delta here of 11. Then it gets building, 84, 105, 327, 429, as it's starting to make its run up to the highs. And finally, we poke up there, make a new high by 1 tick. You get a little bit of selling coming in, right? So again, if you're long from the 91 area, you trade all the way up to new highs at 01.5, and then you see some selling coming in, it's no problem getting out in here, no shame in getting out here around the 97 area after you see the strong selling come in here and here. We did pull back all the way down to, what was that? We did get all the way back down to 91 before working your way sideways. Eventually, we came all the way up here to new highs at 2.5, or 2 3/4, and then 3 1/4. Did get another 0 print in here and another 0 print in here, but really the good trade to take, the best trade to take, was off this bar with the 3 thin prints in it. Okay, and you can see how it just worked its way up nice and methodically. So that's the value of looking at thin prints, right? Remember, order flow is not always about concentrating on the heavy volume, a big bid coming in or a big offer coming in. Yeah, they're very important. They're part of the whole order flow puzzle and all that, but you also got to pay attention to those areas where there's that lack of trading in the two-way auction. All right, everybody. So I hope you got something useful out of this video, and I'll see you guys on the next video. Bye-bye.